Assalamualaikum warahmatullahi wabarakatuh. My name is Ahmad Azli Zainuddin Ahmad Najib. Today, I'd like to present on the topic of explore the Fintech initiative Undertook in Islamic financial system. Let's get to it. Okay, here are the table of content for this presentation. We have 6 sections. First, let's look for the introduction. For the introduction, the 4.0 industrial revolution is exploding with a variety of the latest technologies to replace traditional technologies. It not only touched on the technological aspect of computing and communication, but permeates in all aspects of life, including engineering, medicine, social, economics, finance, and even politics. Fintech is a term used to refer to the use of technology in the financial system. Its emergence began to gain world attention after the global financial crisis in 2008, which saw credit and interbank markets in advanced economies collapse and become unusable. The failure of a number of large and important US financial institutions to overcome financial problems as a result of the housing credit crisis in September 2008 has resulted in a widespread loss of confidence across global financial markets. Next, let's look what is fintech. Fintech is a short form of financial technology. It is any financial related transaction or activity that is currently being innovated and renewed. This results through a combination of technologies that solve a different banking experience to the customers of financial institutions, whether conventional or Islamic banking. Simply put, fintech is the use of the latest technologies in the financial world, such as internet banking, big data, and blockchain. Fintech also help companies, business owners, and consumers to manage their financial operation, process, and lives. During the emergence of fintech, the technologies used in back-end system of existing financial institution was initially implemented. However, a move to consumer-oriented service now covers numerous businesses and sectors, such as education, retail banking, fundraising, and wealth management. Next, why banks embark into fintech? Okay, here are the reasons. As banks begin to embrace fintech as a serious solution to meet the demands of the customers, as well as regulators, here are the reasons why banks should embark into fintech. First, we have reduced operating costs. It can often be much less expensive for a bank to work with fintech on improving their digital services. It offers customers than for it to try to find ways to improve those services on its own. Second, building up brand reputation. This means if one of the partnering companies has a good reputation, that reputation can trickle down to the other company when the two work together. One example of fintech in banking is if a highly regarded fintech company launch an app with a bank, the bank can profit from the status of the fintech company. Third, offering more functions and features to consumers. A partnership between a fintech company and a financial services company allows the bank to offer its customers useful features and a function that it wasn't previously able to provide, such as money management tools or mobile check deposits. Fourth, increased ease of use. Online banking features and apps should be user-friendly and easy for consumers to figure out and make the most of it. When a bank works closely with a fintech, it can benefit from the company's technological know-how and user experience knowledge to provide consumers with a program that is intuitive and easy to use. Fifth, broaden consumer base. A bank and fintech partnership can be a bit of a you scratch our back, we'll scratch yours arrangement. Through the partnership, each company can tap into the existing consumer base of the other, allowing them to broaden their market share and reach previously uncontacted customers. Lastly, we have ability to scale quickly. The partnership between fintech and banks can be quickly scaled up or down, depending on consumer response and overall needs. Next, we have the effect of fintech in Malaysia. Well, fintech potentially has solutions that are alternative to various services offered by bank or financial institution and are therefore generally direct competitors. Fintech companies are mostly startups, though small they may be. They are nimble and operate in niche areas with comparatively lower overhead relative to bigger players such as bank and financial institutions. As such, there is a growing worry that fintech will be the onset of the collapse of finance or banking jobs. One cannot help but wonder the potential effect of fintech on these jobs. Okay, here these are the effect of fintech in Malaysia. First, we have job losses that are inevitable. Fintech companies are already providing various services that undercuts the financial sector. Crowdfunding and peer-to-peer lending allow individuals to bypass personal loans. There is even a fintech company that allows individuals to invest in properties with as little money as they want, eating into the space of traditional mortgage. Second, we have reorganization, retraining, and redeployment. When encountered with structural changes, most parties often dwell on the negative impact. There are positive takeaways from the invention of fintech. Fintech will alter the financial landscape. Lastly, we have changes in recruitment trend. The growing, the growing fintech segment in employment through gradual will have pronounced impact on recruitment trend, while non-fintech industries generally look for experience and education excellence when recruiting. Fintech industry look for different attributes. Next, we have the example of fintech. Some of the most well-known fintech applications are mobile payments, automated investment application, cryptocurrency, business loan online, and crowdfunding platform. Okay, this is the list of technologies that contribute to fintech. First, we have artificial intelligence, AI, and machine learning, ML. Second, we have data analysis and big data. Third, we have robotic process automation. And fourth, we have blockchain. After that, beside the technologies that contribute to fintech, these are the examples regarding fintech applications. First, we have crowdfunding platform. Second, we have cryptocurrency and blockchain technology. Third, we have mobile payment. Fourth, we have insurtech. Fifth, we have robo-advisor. And last but not least, we have regtech. Okay, these are all the examples for regarding fintech applications. Next, we will move to the 2.0, fintech initiative taken by International Islamic Financial Institution. Okay, what is it? Okay, let's see. International Islamic Financial Institution has developed a regulatory sandbox. A regulatory sandbox is a financial sector regulatory structure that allows a live, small-scale testing of innovation by private companies under supervision by the regulator in a regulated environment. Next, the introduction of the Islamic Fintech Alliance by 8 Islamic crowdfunding site operators from across the globe is another initiative. On 1 April 2016 in Kuala Lumpur in Malaysia, the IFT Alliance was introduced. The founding members include Iziap, It is Crowd, Blossom Finance, Norway, Funding Lab, Capital Boost, Launchgood, and Scholar Fund. Then we have Islamic robo-advisor, New York-based Wahid Investment Incorporation launch, Wahid, the world's first automated Islamic investment platform with the aim of providing access to halal portfolio management for 2 billion Muslims around the world. In addition to being the world's first automated ethical investment platform. Following the declaration of Future Finance 2030 is the advent of the Global Islamic Fintech Hub. A turning point for the rapidly rising Islamic Fintech is supposed to be Global Islamic Fintech Center. The Fintech Center will be CH9, which aims at improving Bahrain and the GCC region's corporate ecosystem. Okay, next, we have the Fintech initiative taken by Islamic Financial Institution in Malaysia. Okay, the initiative taken by Islamic Financial Institution in Malaysia are, first, we have Investment Account Platform, the IAP. Okay, was initiated by a consortium of 6 Malaysian Islamic banks, which are Bank Islam, Bank Muamalat, Islamic, Islamic, Maybank Islamic, and Bank Kerjasama Rakyat, and Bank Simpanan Nasional on 17 February 2015. The IAP acts as a core market for the funding of SMEs with an initial 50 million investments. Second, we have Do It Now. Do It Now is the online payments provider that give customers and business owners the option of money transfer through an ID called the Do It Now ID, which means the customer and business owners will not have to use the account number in doing the financial transactions. Third, we have the Orbit. Orbit is established in 2018 in partnership with some of the major players in the fintech industry. The Orbit is Malaysia fintech hub that serves as a congregational point for the local and foreign fintech players, allowing them to interact with industry leaders and regulators to ease solution development and early market entry, and also enabling startup companies to interact with industry leaders. Next, we have Fintech Academy. Education is one of the best methods to increase potential fintech talent. To the end, MDEC has partnered with institutions of higher learning to deliver lectures and modules on fintech. Next, we have acceleration. To stimulate Malaysia fintech industry to grow further, MDEC has launched the Accelerator Initiative, which provides opportunities for fintech startups for local and foreign investments. Next, we have the Financial Innovation Laboratory. It is established in collaboration with the United Nations Capital Development Fund and Bank Negara Malaysia. The Financial Innovation Lab aims to accelerate innovation in digital financial services with new or improved solutions that empower the daily life of low and middle income people. After that, we have Fintech Booster. Fintech Booster is a capacity expansion program by MDEC in collaboration with BNM to assist fintech companies, local and foreign, in growing their product and services through 3 strategically planned modules, which are law and compliance, business models, and technology. Next, we have the cashless payment for the universities, People Pay. The Islam Malaysia Berhad built a partnership with People Pay in produce the cashless payment push for the universities, or also known as People Uni. Next, we have the Alibaba Cloud. Okay, the collaboration between Bank Muamalat Malaysia Berhad and Alibaba Group, where they introduced Alibaba Cloud. Alibaba Cloud is the first local data center in Malaysia, where it was a tool to support and help the enterprise in Malaysia to accelerate the digital transformation. After that, we have the Payment Express. Hong Leong Bank is using the Payment Express application in their system, which this system allows their customers to transfer their money by just entering their phone number rather than have to insert their full information. Last but not least, we have the improving the knowledge of the B40 and micro SMEs on financial services. The collaborative program, in partnership with 11 fintech companies, have onboard 2,300 users from the 3 main product offerings, mainly the microfinancing, micro-investment, and micro-insurance. Next, we look at the challenge faced by financial institutions. First, we have the increasing competition. The threat posed by fintech, which typically target some of the most profitable areas in financial services, is significant. Goldman Sachs predict that this startup will account for upward of 4.7 trillion in annual revenue being diverted from traditional financial services companies. Second, we have a cultural shift from artificial intelligence enable wearables that monitor the wearer health to smart thermostat that enable you to adjust heating setting from internet connection device. Technology has become ingrained in our culture, and this extends to the banking industry. Third, we have the regulatory compliance. Okay, this has become one of the most significant banking industry challenges as a direct result of the dramatic increase in regulatory fees relative to earnings and credit loss since the 2008 financial crisis. 4, we have the customer retention. Financial services customers expect personalized and meaningful experience through simple and intuitive interface on any device. anywhere and at any time. And last but not least, we have the outdated mobile experience. Oh no, number 5, we have outdated mobile experience. These days, every bank or credit union has its own branded mobile application. However, just because an organization has a mobile banking strategy doesn't mean that it's being leveraged as effectively as possible. After that, we have the security breaches, number 6. With a series of high-profile breaches over the past few years, security is one of the leading banking industry challenges, as well as a major concern for bank and credit union customers. Financial institutions must invest in the latest technology-driven security measures to keep sensitive customers safe, such as address verification service, end-to-end encryption, and authentication. After that, we have the continuous innovation. Sustainable success in business requires insight, agility, rich client relationship, and continuous innovation. Benchmarking effective practice throughout the industry can provide valuable insight, helping banks and credit unions stay competitive. After that, we will look for the future of fintech. In such a digitally active environment, the fintech sector can look forward to many new ways and norms to rule the rules in 2021 and beyond. Here are a few of the top selected ones expected to define the fintech sector in the coming years. First, we have the contactless payment is the new payment model. Second, we have embedded finance will find many backers. Third, we have financial inclusion as a necessary part of the industry. Fourth, we have newer partnership. Fifth, we have cryptocurrency acceptance. And number 6, we have watch out for RegTech and WealthTech. Okay, last but not least, we have reached the conclusion. In conclusion, 2020 was indeed extraordinary in many ways. The COVID-19 pandemic was a test for all global business to understand their readiness for such a large-scale disruptive phenomenon. It is good to note that the fintech industry has woken up and realized the importance of digitization and technology. Then, fintech as a new innovation in the financial services is a welcome development in Islamic finance. It will reduce operational costs, enhance resilience of operational process, access new customer segment, and improve capital efficiency. Therefore, the emergence of fintech should be used by Islamic finance industry players as a new means for innovation by developing products and services that will benefit the society and promote economic development. Lastly, fintech has an impact on finance sector. Fintech has an impact on finance sector activities. A number of different jobs will remain important to satisfy the needs of an increasingly digitally knowledgeable customer, as fintech has made it easier for consumers to do their day-to-day financial transaction. And move forward to the future, and fintech can replace all traditional banking operation with all financial activities carried out online. And that's all from me. Thank you.